What a day. What a 2 days. I mean, the fourth quarter is really starting off with quite a bang. And early yesterday, it seemed relatively smooth. And then that disappointing ISM manufacturing. And not to date either of us, but we have been around long enough to really remember when people watch both of those ISMs closely enough. But we saw a huge market reaction that's bled right into today. So do you think that investors are really worried about a recession coming, or what set all of this off? Just an unwind of the uncertainty?
All the above. I think that people are worried about a recession, and I think the market is reacting negatively to negative news rather than reacting, oh, the Fed will bail us out, because I think there's a little worry about that, because there was a time when bad news was good news because of the Fed. We're through that looking glass. Bad news.
And why is that? That's actually a really pretty interesting point.
Because I think people are starting to come around to the idea that the Fed can only do so much, and there's a lag to monetary policy. So even if they were to do something tomorrow, that takes time, and if the momentum's going the wrong way, it's not good.
Yeah, some folks are talking about the idea that rates won't even really do it. It's going to be more their policy in terms of other tools or language that could possibly.
You have negative rates around the world. What's that doing?
Right.
At this point, they're kind of running out of ammunition. I also think that people have long memories, and October's always tough, and last year fourth quarter was disastrous. I think you sort of had the seasonal effect of, opening the futures up, and then as soon as the news came out, down we went.
Before looking at the VIX, speaking of the fourth quarter, let's talk about the third quarter briefly, because in a way that was actually a risk-off quarter. You had the NASDAQ, the Russell 2000, the transports all finishing down, the first quarterly decline of the year. You had treasuries, gold, the havens trading higher. So there was a bit of a risk-off tone coming into this quarter. Do you think we're going to see that continue? I
think so, because the surface of the market was relatively placid.
But if you went beneath,
there was a lot of stuff going on underneath.
Smart early money.
And so I think what happens is, that can only go unnoticed for so long. One of two things has to happen. Either the situation has to rectify itself, which it doesn't look like it has, or that stuff starts to come more to the surface. So let's now really bring your wheelhouse into it. Options, of course, the VIX, and you saw something interesting. You brought a great chart with you of the VIX curve, and you're really going to have to decipher this for all of us. Okay. What we have on top is the live VIX futures curve, and that's basically the shape of the curve. And you can see it's flat, more or less. October, December, next year. Each one is the dot, represents a month. But you could see in the front we've actually started to kink into inversion. And that's really not good. That means we've got a sort of a scarcity of volatility in the short term. We're not at what I would consider worrisome levels. And you can see that we were more or less looked about the same a month ago, and that really was at the end of the cycle of the sort of a mini sell-off. But you see where we were a week ago, and we had no inkling of this thing happening, because that's the yellow line sloping up. Well, very quickly, there's one investor out there who last Friday put on a big S&P 500 put trade. Today, apparently, I'm told at least, took profits on it. What do you think was happening there? Because it was initially targeting a 10% decline in 3 weeks. Well, I think first of all, it's always prudent for someone like that to hedge. So I think that's probably what he's doing going into the beginning of the fourth quarter. Sometimes trades like this monetize themselves very quickly, and that's probably a good time to take it off.